not a rosy picture on the macroeconomic front because trade deficit has really doubled in the month of May compared to the same period last year. While India's exports have surged a little more than 8% in May compared on a YOY basis, well, imports have seen a substantial jump, rising over 33% on a YOY basis. Meanwhile, the current account deficit soared to $3.4 billion in the fourth quarter from $0.3 billion a year ago. Latha Venkatesh is right here to put all those numbers into perspective. Latha, going through the trade data first, and gold imports have substantially increased. That's one of the big reasons.
To me, it looks like that is the big reason. The trade deficit first at 13.84 billion in the month is, look at the jump. Year on year, it looks quite horrendous. It's doubled from 6.25 to 13.84. It's over 100% jump. It's about a 30-month high. The key point is that from the imports have jumped by 34%, exports only 8%. It would be very tempting to say this is because the rupee is strong, it is cheaper to import. But actually from the imports, if you take away that 5 billion of gold imports, then your deficit doesn't look very big. Look at the year-on-year comparison only in gold. Gold is 4.96. Last year, same time, gold imports was $1.5 billion. That's why this very big jump. Gold imports have jumped not just in May. May is 4.96. Last month, it was 3.85. The month before, it was 4.2 billion. Compare this with the $1.5 billion year ago. What is the difference? For 3 months in a row, we have got $4 to $5 billion of gold imports. My sense is this is the demonetization impact. People who are now saving in cash don't want to keep 500 rupee notes and 2000 rupee notes, and you can't keep sackfuls of 100 rupee notes. So they are saving in gold is my very big fear. That post-demonetization, we are seeing a sharp jump in gold imports, and that is why we are getting a nasty trade deficit month on month. This is something the government will have to very clearly watch out for. One would worry about high imports, but if it is only gold or largely gold, this is a worry.
And ma'am, talking about balance of payments as well, FY17, $21.6 billion, Q4, $7.31 billion, as per the data that has been released. How do you read into that?
Well, at the moment, the current account deficit at 3.4 billion for the fourth quarter, maybe a little higher than Q4 of last year. Q4, we always get good data because that is when our exports zoom. People are in a hurry to bring back the money. All Q4s are good quarters for current account deficit. I mean, it's the lowest. So there are times when we have almost had a surplus. So, you know, 0.3 billion is as good as flat. There is no current account deficit at all. The 3.4 billion that you are seeing now is exactly because of this. Month after month, we have had a higher trade deficit because of gold, and that is why we have got even 3.4 billion. But I wouldn't worry really about 3.4 billion current account gap. What is it? It's 0.6% of GDP. We only have to worry whether in the coming year, gold imports don't become a monster. Otherwise, for the year as a whole, FY18, our current account deficit is, less than 1%. Current account deficit is not a worry at this point in time. We only have to ensure that this ugly trend of gold imports doesn't catch on and disturb the current account balance.
All right, so gold is going to play a very, very important role, and in trade data that has been released, we've seen a huge surge in gold imports in the month of May, and that could be a worry going forward. So that was the analysis really coming in on the trade data. Thanks so much, Latha, for joining us with that analysis.